And then we're going to move to the Chief Financial Officer's report. Dr. Skinkus?
Chris, how do you say your last name, Chris? It's Chris Scalette, the auditor, is here tonight, so what we'd like to do is let Chris present, answer the questions we received on the audit. Kristen can then introduce ECRA and have them present, and then Scott and Kristen can go into their separate reports after our visitors present. So Chris can come up first.
Thank you for coming out.
Yeah, no problem.
We received questions from 3 board members.
I did.
John Keane, I think, submitted something on pension liability. Mr. Gritchen had 2 or 3 questions that were forwarded, and Mr. Walsh had a series of questions that were also forwarded. So if you could summarize the audit, your findings, and then answer or address a majority of those questions.
Okay, normally I'd like to start off with the audit opinion. You guys have all electronic, so I think my page numbers will be a little different. So it's going to be page number 1.
And for us, that is what number, Mayor? 79.
So this is the independent auditor's report. No changes for 16 regarding any of the report format. As usual, like the past, the district received an unmodified opinion, which basically says that the financial statements are presented fairly in all material respects, which is the opinion that any auditor would like to give out, and obviously is the opinion that the district would like to receive. Then the next opinion here, it's more of just a report. It's internal control over financial reporting. It's page 4 for me.
83, is it?
82.
82.
And this basically just says that we don't test, we don't report on internal controls, but we do look at the effectiveness of those internal controls, and the district, again, like the previous years, is sound in internal controls as well. Next portion is the MD&A, which that's more of Scott and the district's portion, so I'll pass over that because this is just a summary of the audit. So we can go to page 12 for me. It's Exhibit A.
92.
So Exhibit A is your government-wide financial statements, which is different than our fund financial statements. So what we do here is we depreciate your capital assets, and then we set up your long-term liabilities. One of the questions from Board Member Walsh was the deferred charge on refunding. This happens when we refund a bond, and the payment to the escrow agent is different than the actual amount that we refunded. So that amount will get amortized over the life of the new bond that was issued. Excuse me. Pension liabilities, I'm going to get into those when I get into the notes because there's a lot of questions revolving those. So if we flip the page here, page 13, this is Exhibit B. This is Statement of Activities. Change in net position. It's the most important line item here. District, about $2.5 million, our net position increased government-wide. Now, if we flip to Exhibit D, this is fund financial statement, so it's what goes in is what goes out. If we buy a fixed asset, we expense it. I don't take it off the books and depreciate over the useful life. As you can see, for fund financial statements, the district, we were close to break even as a $177,000 loss, just as the difference between really your debt and your capital assets. Obviously, last year it was 708, so it was $500,000 difference there in the better. Now, if we could, page 21 for me starts the notes. Same format as before. I'm not going to go through all the notes. What I do want to go through is the pension note, which starts for me on page 33.
Chris, give them a chance to find their page.
118 for us. if you downloaded it today. Note 7, retirement fund comments,
Yes, sir.
commitments, I'm sorry.
Right. This is this is my 5th board meeting, and obviously, a lot of the board's concern is revolving around the TRS footnote. Obviously, the district's pension liability increased significantly again. If you flip the page 34 for me,
119 for us.
the bottom of the paragraph is the most important part here, where it says employer's proportionate share of the net pension liability, so that's the 1.56, and then the state's proportionate share of the net pension liability. To be honest with you, I wish I had an answer why these amounts are increasing.
It doubled, right? Didn't
It
just
doubled.
increase, it doubled since
Correct.
last year by almost $50 million.
And this is something that is given directly to me from TRS. I have no control over those numbers. They give me the numbers, I put them in the audit report.
Do you have the assumptions that TRS used? Is it because they changed their interest rate assumptions?
I mean, the interest rate assumption barely changed. I mean,
I thought it went from 7.5 to 7 or to 6.5.
we're still at 7.5 for TRS.
You're still at 7.5?
Yep, for TRS. So and obviously, that's a huge number too, because like I tell boards, who's getting 7.5% on their investments? I mean, it's inflated beyond. Now, I'm not sure what's gonna happen in the future, but I think at some point, part of that,
But if the interest rates lowers, the liability's gonna go up. It's an inverse relation, isn't it?
The liability's gonna, go up big
I
time.
mean, if it
Right.
went from 7.5 to 5,
Right,
it'd
it'd be
probably
even
double
worse.
or triple
Correct.
again, right?
correct. But I still think that the rate is high for what they're using.
Well, that's,
I mean, they're being extremely conservative.
so they
No,
doubled
they're being
without
aggressive.
changing the
Aggressive.
rate.
Right,
being
right,
very aggressive.
Right, I'm sorry.
And even I think the state of California just lowered their return on it, so.
Well, okay. Let me go back to the question I first asked. We look at these financials on a cash basis all the time.
Right,
We're basically given this to look at to see, here's an audit report. But
Right.
really, this is, from the business perspective, the real financial statements of this district. They're not the cash basis we do on a monthly basis, right?
correct.
So, not knowing how they doubled this year, if Madigan comes through with, and Zaluski with their promises, they shift the pensions. Based on this, it's almost a $100 million shift of pension costs then to our district, right?
Sure,
So,
sure.
so the question we have is, whose responsibility is it to find out why it doubled?
I mean, obviously, I've made phone calls for all my districts to TRS. Their exact response to me is they are working with the actuaries to get responses to all the district's questions.
Okay, so we have a pending question that they're
And that's
following up
for all my
on.
districts.
Yeah, could you, in doing that, when you do get an answer, could you make sure to ask the question, if an individual was, worked at multiple districts, how does TRS allocate that liability out? Do they give it to the last employer, or is it,
Right. Now, even if our books were for the audit on cash basis, this note would still be there, and obviously, the pension liability would still be in effect. It's not necessarily have anything to do with
I didn't know.
cash or accrual
That's-
basis.
But we don't show this on our cash statements on a monthly basis.
Well, but it's not a real number either. I mean, the only place I don't show the state's proportionate share of the net pension liability in your financial statements.
I know,
Okay.
but what about the $1.5 million of our liability? That's a real.
That part is shown on Exhibit A and B only, not on your fund financial statements.
Right.
Right.
Now, the employer's portion, that's separate of what the teacher's paying, correct?
Correct. Absolutely. That's directly the district's portion. Now, if you remember, that's on future retirees. That's not as of today. This is an actuarial assumption, assuming in the future, when the teachers retire from the district, that's how much this district will owe. So it's not as of today. It's as teachers retire in the future.
Okay.
But if public agencies had to fund pensions like private businesses do under the federal laws, like a company, they would have to fund that. We
Sure.
don't because we're a public
Sure.
agency. But the fact is, it is it's supposed to be a good estimate of what additional future liability we have, whether it's next year or 5 or 10
I mean,
years from now, right?
Who knows, next year that number could go down. I mean, at this rate, I mean, remember this note and these actuarial studies, this is the second year they've only done it.
Right.
Last year we implemented it, second year, so I think as time goes on, I would hope this gets more consistent, not fluctuating. I mean, Waukegan School District 60's pension liability went up $40 million compared to $10 million in the previous year. So it's not just this district, it's every district across the state. So I don't know if the concern should be for the board in that sense where it's like this everywhere. The state's gonna have to do something about this. I mean, it's not gonna go away.
Yeah, we heard what they're gonna do about
Yeah, we know
Well,
what
yeah.
they're proposing. That's why we're all worried about it.
Okay, and after TRS, we have IMRF. IMRF is completely differently funded, so IMRF is doing obviously a lot better than TRS. TRS is the main concern here. The pension, oh, that was another thing. If we go to page 43 for me, 42, 43, there's a new note, partially a new note, OPEB.
Other post-employment
Yeah,
benefits?
yeah, right there. So, next year, GASB is mandating that every school district, receive an actuarial study for OPEB every year. So, these numbers should start becoming more consistent as well. Like for our district, it was an interim year, there was no study needed. So really the numbers are based on estimates that are just calculated through. It's just so next year, a little different presentation for OPEB. And then if we go to page 45, there's a new note, note 13. General state aid expenditures for special education services. Really what ISB and GASB wanted a note to explain the amount that's being paid for special education out of general state aid monies. This number is given directly to me from general state aid. To be honest with you, every district I'm getting these numbers for, the numbers seem extremely low, but again, it's given directly to me, and GSA just wants to know that the districts are spending GSA monies for special education.
So it's not all the state funding, it's just what we fund out of the general state.
Correct.
Because most of the special ed is funded from other than general state aid, right?
Correct, idea flow through.
In LADSI, right?
Well, we pay Lansing out of our,
Right.
whatever our idea flow through.
Right. And then after that, it's really just more of the notes in other formats. I'm not gonna go through all those. And then, once the schedule starts, it's just your funds individually that flow through to your exhibits, which I'm not gonna go through all those either. I think, back. Oh yeah, one other thing, we had the new bond issue, so the schedule 16, 17, and 18 is the last 3 pages of the audit report. Updated bond schedules. Obviously, 2007B is still there, but Schedule 17 and 18 does have your Series 2015A tax school bond, and then your refunding bond as well. So, and then, I think if that's, IMET, okay. I had a question regarding IMET. Remember when we had the meeting with IMET where last year I only wrote off 53.5% of the loss, which was $133,000. So this year I had to write off the remainder, which got our cash back to what the treasurer has.
And the treasurer wrote off 100% the first year.
Correct. So now our cash is back to exactly what the treasurer has, per the confirmation that I sent out for the audit as well.
I think that was one of the questions submitted.
Yeah, so how much, we didn't, It was
133.
like 10,000 this year, right?
No, see, that 10,000 that you were questioning, that was the loss just from 208 in all investments, not just IMET.
Oh, so that was in addition to the IMET write-off?
Correct, because
We had
obviously.
another 10,000 loss?
Correct. But remember, your books that you see on a regular basis, that loss was previously written off.
Okay.
So it's, now we're even. It's really, kind of really was just a $10,000 loss. If you say that the 133 was last year, then the 10,000 this year, now that's done.
Okay.
There was a question regarding the parking lot lease, why, what, it's not included as an operating lease. Operating leases are only reported if they're greater than 1 year. Year-to-year leases with renewals aren't considered an operating lease. So that's why the parking lots are not included as a footnote.
That was a 20-year lease.
Yeah, but it's
It's terminated in less than a year?
it's year-to-year and it's based off fees, correct, Scott? It's not a standard, an operating lease is a copier to me, that's $300 a month. A year-to-year lease with different rates or amounts being billed is not considered an operating lease.
Okay, keep going.
And I think that was just.
So if you have an escalation clause in an operating lease, like it's for copiers, 10-year lease, 10,000 year one, and it escalates for 3% based on inflation over the 10 years, that means it's not an operating
No,
lease?
that would be an operating lease, though. 'cause
Well,
the
that's
pay-
what our lease does. It has an escalation clause each year, increasing the rent. It was set at the time we entered the lease 20 years ago.
But the amounts, isn't the billing, how does that exactly work?
That's separate than the lease. We pay rent on the lease, and then we do something with how we bill the children and what the village gets on that.
But there is a rental.
There's actually a rental on an annual basis with the type of CPI escalation
Which,
clause in the lease.
Which lease are you discussing?
The-
The Rockefeller lease or the zoo lease? The zoo lease goes up a flat $1,000 a
And
year.
how long is the zoo lease?
It's kind of got like an evergreen clause, I believe. I think it goes till,
You know what, if I can get the contract, Scott, let me take a look at that. Maybe it should be something I should put in there if it's necessary.
They're not yearly leases, that's why I raised the question.
It's long-term.
They should be- they're-
and the Rockefeller lease was like a 10-year lease, and they bill us an invoice each year, one payment every year. That one may not have gone up over the last few years, but the zoo one goes up a flat $1,000.
Scott, can you pull those two leases for me, give me an email, and then, if I have to add it, I'll add it, and then I'll update the audit report. Right, so you give me both of those, I can update that.
And this is only a draft, that's why we asked for the extension.
Right, and yes, I'm wondering why I never heard about that before, it kind of upsets me, but as long as we can get it in there now, we make it right now.
Dr. Skavis, the lease for the zoo is, it's a one-year lease with automatic renewals.
Okay.
So that would not be an operating
Right,
lease.
that one isn't, the
Okay.
Rockefeller one was.
So it would just be for possibly the Rockefeller.
Yeah, just if you could pull that one, I'll take a look at it. If you get that to me tomorrow, and then we can get this finalized.
Does that cover the questions?
I've covered majority of the questions. Some of the other questions for Mr. Walsh, I will respond, like I always do, with more detailed.
Okay.
I had a question on the township report. Did you get that question?
No. Would you like, can you ask it again?
Yeah, I gotta find a page. Unfortunately, I don't have the page. Let me get to the page.
I think it's in the email where it's also a question on our stuff.
Is this in the IMET difference email?
On the treasurer, I thought the treasurer had written 100% off already.
They did.
Okay, then there's activity in there saying something to the effect, auditor adjustment on cash balance
In the IMET, or in
on the
the,
treasurer's audit.
do you have
It's in the
that?
package. Do you know what page it's on?
I'm trying to find it. I had a question. a week ago or 2 weeks ago, whenever I.
Did you send it?
What'd you say it says?
Somebody-
How do you
it's-
search? So the auditor's adjustment?
Yeah, it's on, it's the one that shows all the individual districts' cash positions. Here, yeah, on page, let's go to page 289, of our page 30 of the, you have two lines in there. You have the IMED adjustment, which I thought had been already written off, and then you have something right above it, district's auditor adjustment of cash balance.
All right, so your IMED adjustment, remember, EMP did not write off. EMP did the same thing for the treasurer that I did for the district here. So that's,
I thought we were told that the township, that the treasurer had written 100% of IMED off already,
they did.
okay?
And the monthly reports you received, that amount was 100% written off. For the audit, like in last year, 53.5% last year, and then the remainder this year. So it'd be the same thing. We did the same thing here that we did for the treasurer. And then your district's auditor adjustment of cash balance is just gonna be.
So when you reported this to us, when you were giving us your update last year, it was at the start of, they wrote it off at the start of the 15-16.
Correct.
Okay. Does that make sense, Gary?
Yeah, 130, okay, then what's the 68,000 impact to District 208 on the district auditor's adjustment?
Can you flip to one more page? Scott?
Mary Ann has it.
Oh, sorry.
Mary Ann, what, the next page?
Yeah, 'cause I gotta see what 208.
Might need to shrink it down a little, Mary Ann, so we can see the left as well.
So the 133 is our IMED loss, right?
Correct.
So that's what their investment, that cost the district $133,000.
Right.
And then now what's the $68,000 district auditor's cash adjustment?
That means the township treasurer did not reconcile the bank correctly, so we had to fix it. So we had to adjust your cash by that amount.
Why our cash not spread, allocated amongst all the districts?
Looks like
Because-
it was.
Why is it our, well, it was, how did, out of the $20 million, how did you know the 68 was, out of the, how much cash? 248 million, whatever the number is.
Right.
It was in our 19
Look at the
million.
line across though, Gary, there's a 507,000 credit on that.
That they didn't
line.
reconcile their bank account for $500,000?
You got it.
Are you
So
kidding?
what kind of internal controls did they have?
I mean,
You gave them clear on their internal controls last year.
remember, but we don't report on the internal controls. There's
You
not
report
an
that-
I know,
opinion.
We know.
but you're telling me they had their bank accounts unreconciled for $500,000?
You got it. They honestly, we go in the treasurer's office usually 3-4 times a year to help them reconcile because they don't have the capability to do
And
it.
how can we get some
So
support
these
from how they
are,
reconcile?
we don't know where
He
the
doesn't
500,
know.
it could be an operating, it could be some money they spent on.
Well, the 507 is across all the districts within the township. It's-
No, it isn't.
No, it isn't. It's a number that they allocated across the districts. What's the source of the 500,000?
When we do a bank rec, obviously we know what checks are from what districts. So if I pulled up all of 2/8, we do bank recs for each district. Obviously, we know what checks are going out for 208, what monies are coming in. So we do individual bank recs. There was something that was misposted on the treasurer's side that wasn't included in your district. Just so happened to be 208 and 209.
Which is proviso.
Correct.
Well, there's more, because it's $500,000, so we just happen to have these two pages up there, right? Those two districts up there, if you go to the other districts, right?
No, District 89.
I mean, you had District 89, yeah, hitting 328,000.
Right.
So that we understand, what does that mean?
Means the treasurer's not reconciling their books of, that's what that means. And I've had this problem we've brought this up with George, I brought it up with Mr. Coglanese. You know how they are over there. I mean,
So we have an organization that's managing $250 million amongst various districts, and they're not staying current on their bank recs, which is the primary thing what they're
There's nothing
responsible
else to
for.
do.
Right.
What else do they do?
They
It's not,
take
they have
money and
investment
they write
advisors
checks.
investing the cash.
No, you're
Yeah, we're
absolutely right.
mandated to use them by law.
Right.
I mean, this may be something that we need to, the district needs to take up with George.
We have.
I say we consider having Kevin contact the superintendents of the other districts that had big adjustments and see if there's something we can do. I mean, this is ridiculous. We pay them a ton of money,
I
and they have
understand.
crappy service, and they can't even reconcile a bank statement?
You know, we've been trying,
I mean, if-
yeah, one of the people there should not be working there. It's period.
All
It's
right,
it's
let's,
simple,
let's,
you know?
let's
Why don't
stick
we-
to, he doesn't work for a treasurer.
so
I
I-
will,
Okay, I understand it, and I guess another issue that ultimately, because everywhere I'm looking now, pension. Currently now, they only charge us based on their current year expenses, correct? Based on some allocation, based on the number of expenditures we have, they look at roughly what they're gonna budget out, and then they have to allocate that to all the districts. The one area is, once they get their pensions dumped down to them, that's gonna be an additional burden on our district, is it not?
I'm not sure I could answer that question.
Well, what other sources of income does the township treasurer have?
Well, their source of income is just from,
Right.
Running the
So if they
district.
have additional expenses dumped down to them,
they're not in TRS, though, that's all IMRF.
yeah, but IMRF's, what's their rate of return that they're projecting? They have 7.5%.
I know, but
7.5%
IMRF is
interest.
almost completely funded.
Yeah, so once that gets adjusted down to the reality of it, suddenly that asset position goes to a liability position.
Sure, I mean, you're absolutely right.
Right, and so the only way they're gonna have to recoup that cost is dump it onto districts.
The districts that are within the treasury.
Right.
that
All
would
right, thank you.
ultimately- yep,
So you have your list of follow-ups?
I do.
Okay.
yeah, check the Rockefeller lease. Between Scott and Chris, we need to get some information from the treasurer's office why they're not reconciling their bank statements in a timely manner.
And we can talk about that at the council meeting, if we have one next week.
Yep. Chris, you good? Anybody else
Sure.
have any questions that you're not covering?
Seeing none, thank you very much.
None, sorry.
Thank you very much, appreciate it.
Yep, no problem.